Hello traders and welcome to the Trading Fanatic channel. It's Iliya here, and as always I'm super excited to have you here, and here we are with another educational video on taking profits. How do we measure our targets? When do we exit a trade? And where do we place our take profit area? So in this video, I'm going to break down a few approaches, to be precise, 3 strategies that I personally use for my take profits, right? And a little disclaimer, guys, so you know that I'm a day trader. If you've been watching some of my videos, you know that I enter a trade, for example, in the morning in London session, and then I'm going to hold it around New York open to, let's say, London close. So I'm a day trader, and I do not usually hold positions overnight. So my take profit will be different than the swing traders' take profit. But then what if you get into a daily high low, for example, and you expect a huge move to the upside? So why miss on all of those pips when you can turn a day trade into a swing trade? And this is my favorite thing to do. Actually, it's something that I've been practicing to do. And in this video, I'm gonna touch on all of those. So if you are, for example, a scalper, a day trader, a swing trader, then you will for sure get value from this video. So make sure to stay around. If you're new to the channel, it's all about trading. I share weekly analysis every Saturday. I share educational content and much more is to come. So make sure to subscribe, hit the notification bell in order not to miss the upcoming videos. And if you already did, let's see what do we have for today. All right, let's get started. So first of all, I want to identify again that the take profit levels depends on the strategies that you are using. Personally, I'm using 3 strategies. 2 of them are continuation trading and 1 of them is more like a reversal manipulation trading, and they have different take profit objectives. But again, so first of all, if you've been watching my videos, again, you see that I always use the Fibonacci tool in order to measure my take profits. And this is a very, very good approach that I'm going to share with you right now. But first of all, we have to set up our Fibonacci. And again, this take profit strategy is for day trading only. So if you're swing trading, then you can definitely use it, but potentially you have to go on the hard time frames and identify those pushes and pullbacks and then potentially measure that with the Fib. But as you know, on the Fibonacci, you have extension levels. And why do you use those extension levels? Well, exactly for take profits. As the Fibonacci has its magic numbers, 38.2, 50, 61.8, 78.6, and this sort of stuff, you have extension magic numbers as well. That's very nice, all right? So I'm just pulling my Fib, double click, and you can just have a look at my stats. So I can delete, for example, the 705, and this is your Fib. So you have the 0, the 1 level, and then you have 38.2, 50, 61.8, and 786. No trend lines right here. You don't need a trend line. You don't need a background as well. Keep it as clear as possible. Values, make sure to copy everything so that you're set up. And the important levels for the take profit is this one. So you have to write minus 0.27. And the second one is minus 0.62 or minus 0.618. 62 is rounded of 61.8. All right. And then again, what you can do, even to easing yourself more, you type 1.272. And this is another extension on the other side. All right. So, and when you got this, when you click OK, your Fibonacci should be looking clean and very nice like this. Okay. So there are 2 strategies that I use with the Fib, and I'm going to have a little case study right now with you on a trade that we actually took yesterday. So the trade was Euro Aussie. So as you can see right here, the market attempted to create right here a lower high, but it failed to make a lower low. And then we had this nice indication to the upside that the market is reversing. So we have a broken structure and a failure to make a new lower low. So what does that say? Well, it says that the market is reversing. It's just shouting at us. And then what do we have, guys? So the Fibonacci strategy is more for structural trading. So if you trade market structure, if you trade like impulse and correction, if you trade Elliott wave and these sort of stuff, the Fibonacci will always be nice, but you have to make it simple for yourselves. Okay. So what do we have right here is this beautiful push to the upside and this pullback. So we are looking for a trade right here. And to be precise, after this bullish engulfing candle, we have a little bit of a wick. And if I go on the 15-minute time frame, we have a double bottom, beautiful. Most recent structure was broken right here. Here is your retest with that wick. So we get in right here. Where is your stop loss? Well, the stop loss is pretty, it's pretty evident. Then it should always go below structure. Is it going to be below this structure or below this one? This depends on your if you're conservative or not. And then the question comes, where do I place my take profit now, bro? Okay, two strategies that I use and I'm gonna share with you. So the first one is using the reverse Fibonacci of the pullback, of the retracement. Okay, so this might sound a little bit tricky right now, but what you have to do is you have to take the retracement. So here is your retracement. This is where you look for a trade. This is the end and this is your entry. So this is the lowest point of your retracement. So you take your Fibonacci from the lowest point to the highest point. And this gives you the extension levels, which are exactly right here. And my highest probability extension level is the 27. So this is your reverse Fibonacci level right here. And then you have another one as well, which is a more longer term target, but I always advise, and I always do, I advise my students to take a bigger portion of the position at the 27 of the reverse Fibonacci. So here we go with a nice 2.5 R&R trade. So this is your reverse Fibonacci. But then what you can do is you can go on the hourly time frame. So instead of calculating the reverse Fibonacci, and remember again, the reverse Fib is for the retracement. But then what you can do again is you can go on the hourly time frame and you can calculate the push and the pullback. And this is how you actually, all of us use the Fibonacci. You have an impulse, then you have a pullback, and then you expect the market to fulfill the extensions as well. So in this situation, when I usually have huge wicks like this or huge wicks like this, I like to take it from the body, for example, right here. Because this huge wick will really disturb the setup. I always take it from the wicks usually, but when the wicks are like this, for example, normal wicks, but when it's a bit like this, then I'm gonna take it actually from right here, from this candle where the move started, and I'm gonna drag it to the wick of this one because that's a normal wick. And then what do you get is you get another extension, which is the 27 extension of the original Fib. And my take profit strategy is actually in between all of those areas, and even preferably between the two 27 extension, you get a beautiful take profit pocket. Okay, and as you can see on the 15-minute, the market actually went to perfection to hit the 27% of the original Fib. And then what do we have? We have a reversal. Okay, so you can actually take your take profit a little bit higher for a nice 3.20 R&R. Okay. So this is how we do it, guys. This is how we do it. And actually there was another example, I believe. Let me have a look if it was Aussie USD. Yep. So here we go. Let me just delete this analysis. What do we have right here, guys? Again, full hourly analysis. So the market pushing to the highs. We created this little minor structure. The market strongly broke to the downside, broke below this structure as well. So what do we expect? We expect shorts. Here we go, the break of the structure and the retest. We have a push and a pullback. Again, where is your original Fib? We don't have huge wicks, so I'm gonna take it from right here to the low, 38.2. And as you can see, 27 was fulfilled. But again, how do you measure your take profit for shorts? Well, again, you have to look at the retracement. This is your retracement and this is where you enter a trade. This is your high and this is your low. So again, it's the opposite for taking shorts. You take it from the high to the low, and you get a 27 extension again. And you can see that the 62 right here aligns to perfection with the 27. And I will not share everything with you guys right here because I want you to go into your charts right now and just experiment with this one, because you will see a lot of confluences in between the Fibonacci. So as you can see, you have a very high probability area of take profit right here. But again, as I always do, and as I always tell my student to do, just secure some profits at the most recent Fibonacci, which is the 27. You see it got tapped, rejected, and then it went further to just tap the 62, to tap the 27 of the original Fib, and then we had the reversal. So here is your example for the Fibonacci, and I hope that you understood it. If you have any questions, make sure to drop me a DM or mention it down in the comments. All right, let's have a look at another take profit strategy, which is actually pretty simple. It's just simple support and resistance. So I want to make something clear though. What is the difference between supply and demand and support and resistance? Well, support and resistance, you know, is a level. So for example, a support, let me just get the tool. So for example, the market taps into that level and pulls back. This becomes a resistance level. But if a resistance level is broken, then it becomes support from the other side. So you can potentially target that area as a support and resistance. And usually support and resistance is in between the price, while supply and demand are levels where the market just tapped and strongly reversed. The levels that the market just tapped and strongly reversed. And those are usually tops and bottoms. And support and resistance is something like this, for example, in between, something like this, for example, in between. And yeah, something like, yeah, you can find many examples of support and resistance. And why I don't like support and resistance, guys, is because you can just plot a line like this randomly and you're gonna see, oh, respected right here, support. Oh, other side resistance. Oh man, look at that, break and retest, support. Let's do it again. Boom, tap random line. Oh, look at that, man, support. Oh man, it was resistance right here, break and retest. Have a look on the left, resistance, resistance right here, resistance, support, beautiful. You can just drop any lines anywhere in the chart and you will always get those levels, okay? So let me go for a little case study on a trade that I took previous week and how I actually manage it. Don't tell anybody, but I did not hold it to my intention targets, but let's have a look. So I took a long from exactly from right here. Why I took this long? Because it was a daily higher low and there was an hourly very strong support and resistance level, but which was more like supply and demand. Why? Because when the market tapped right here, strongly reversed, then it broke and that level wasn't retested. So I was really looking around this sort of range right here to be taking longs. And when the market came in here, what I did is I waited for some signs that the market is going to reverse. The market tapped, manipulation below this low, broke structure a little bit, most recent structure, and then gave me a pullback. Okay, so that pullback was actually a Fibonacci level, 61.8, as you can see. So this is my entry right here. And I used some other confluences on the 15-minute, which is a nice level right here as well. But I was entering right here, very sniper entry. So what are the ways that you can manage that trade and how did I manage actually? So what I was doing, my first profit target was this level, this thing right here. And this was not really support and resistance, but it can be classified as support and resistance because it's in between the major area and this major area where I'm expecting a reversal. And as you can see again, okay, we have support, break, retest, resistance, push back down. So when the market comes in here, this is where I close my trade. Okay, I close it. But then again, guys, what is supply and demand? And when do you want to hold your trades? So for example, if you're a swing trader, you would have seen, oh man, look at that. This is a daily higher low. So what is the potential that the market right now, I'm again not gonna take this wick, I'm gonna take it from, let's say from right here to the highs, 50% was tapped. So what you expect is actually a 27% extension to be fulfilled. But have a look, you have a retracement. So if you get into your trade, you can also calculate your retracement level from the low to the high and you get another 27 extension. So there is a very high chance that the market is gonna reach around right here. And if you just zoom out right here on the left, you will always see very high probability levels of supply and demand. And this is your daily. So this is a huge daily target. And as you can see on the level, 1.20. And if the market taps 1.20, we're gonna have a reversal. But then again, this is very long term and this is for the guys that trade a daily time frame. What was I looking at is this level right here, this strong bearish engulfing candle, and the last bullish candle is actually a supply and demand area. Indecision candles, supply and demand, order blocks, whatever it is, this is a strong area that the market held into, consolidated, faked above, and strongly removed to the downside. So you can take the whole body like this, you can take the whole candle, you can take only the wick to the downside, you can take everything. So let's say we took the body. Where I took my take profit was right here at the support and resistance and at the Fibonacci extension, which was a 62 extension as well. Have a look, exactly 62 extension right here. So we take our profits. But then again, if you have a look at the longer term perspective, you spot levels like this. And in order to make it more systematic, guys, how do you spot levels like this? Look for points of price where the market reverses strongly. So the market tap right here and reverse strongly. The market tap right here and reverse strongly. And when the market comes again, it's going to react. The market taps in here and reverses strongly. So for example, if the market came again right here, this was too, yeah, this is a little bit too like far back in time because I should have wanted to see a immediate retest, but then the market created a new structure and we were bearish. Hence why this area reacted but did not work out because we were turning bearish. But then again, you just have to zoom out a little bit. Have a look at this area. Huge move to the downside from right here. So what you do is you just take that area and go forward in time. The market taps and creates another huge move to the downside. This is where the market again tapped and reversed massively, where the market goes exactly right here, fakes below and reverses. So you can use such areas for take profits, and this is how I actually wanted to hold that trade. But again, don't tell anyone, I did not hold it right here. Okay guys, so this is actually the strategies that I use for take profits. Again, my most like regularly used one is the reverse Fibonacci. So again, let me just drop you a little bit of a textbook example so that you know how to measure it. You have a push, a pullback, and a potential push. Okay, so your original FIP goes from the low to the high, and you have a 27 extension, but your reverse FIP goes from the retracement low to the retracement high, and you get another 27 extension. And as you can see right here, the 62 and 27 align. This is another little tip from me. When such occurrence occurs, okay, you can definitely look for a high probability trade around right here. For shorts, you have absolutely the same push, pullback, and a push. Oops, come on, man. Push, pullback, push. So what you have to do is you take your original FIP from the high, from the high to the low. You right here, retracement, you have 27 and 62. But then again, if you want to measure, a more recent take profit, you take the 27, you take the retracement from the high to the low for shorts, and from the low to the high for longs. Again, take some time to assimilate this one because it can be something new for you. And then you have all of those levels right here of confluence that the market can tap into and hit take profit. And again, very important for this one, guys, the market has to be trending. So you have to have a lower high and you have to expect a lower low, because if you're trading within a consolidation, then it's very not likely that the market is not gonna make a lower low. Okay, and then the next one that I use is support and resistance and supply and demand. So if there is a how to say it, a logical area that you expect the market to retrieve from, to reverse from. So for example, this support and resistance level that I spotted, when the market taps into it, we can expect a withdrawal. But is that withdrawal gonna be temporary and the market gonna reverse? No, because we have a higher time frame target, which is right here, that the market can potentially go into. And not to say that we have a daily target above right here, if you remember the FIBs, that the market can run into as well. Alright guys, so this was a very short video on take profits. I really hope you got something valuable from it. Let me know, how do you measure your take profits? What kind of strategy do you use? And do you think this little strategy will be beneficial for you, for your own trading, and for your own take profit measurements? Again, thank you for staying up until now, guys. If you liked the video, make sure to hit the like button, subscribe, hit the notification bell, and leave a little comment below to support me, because I always appreciate seeing your comments. Alright? Take care, guys. Have a crushing week and see you on my next video.